Randgold Resources has benefited from a higher gold price, with profits up 19% quarter on quarter and 25% up on the same period in the prior year. However, power supply interruptions and mill downtime was a drag on the business, ending in an 11% drop in quarter on quarter production, albeit from a record high. Mark Bristow is CEO and joins us now from the London Stock Exchange. Mark, it's good to talk to you. Clearly it's been a good quarter in terms of the benefits and the rise in the gold price, but how frustrated are you that progress has been hampered by operational headwinds?
You know, I think I've always said you can't run a gold company on a quarterly basis. And, you know, if you look back at the same quarter a year ago, we've really made a lot of progress. As you rightfully point out, you know, the base of our business is designed at 1,000, and with, you know, the fill up in the gold price, on the profit line, we did really well. It augurs well for the rest of the year because, you know, as we pick up on the gold production, that'll improve our bottom line. And I think what's particularly pleasing is the performance of the Loulo-Gounkoto operations. So we had a mixed bag as far as operations go. A softer production profile out of Kabali and DRC and Tongan and Ivory Coast, but a very solid performance in our Mali operations, particularly on the back of our move to own a miner, and we're seeing now those cost savings coming through.
Well, can I pick up on that point actually about the Ivory Coast operations, the Tongan production shortfall, seemingly because of power supply issues. What can you do as a company to cut downtime due to this sort of issue that the mine in Ivory Coast has been suffering from?
Yeah, I think you know, it was power, and it was also we commissioned a new crusher addition to our processing flow sheet. So a double whammy. The power interruptions and instability aggravated that you know, unstable plant that always comes with commissioning. This power issue has been going on for some time as the Côte d'Ivoire really gets its infrastructure and distribution back on track, following, you know, a long period of instability in that country where the north and the south were almost not talking to each other. At the same time, the power utility has you know, been trying to force significant increases in tariffs against the sort of principles of the industry at large, as investment agreements with the government, and also, you know, some resistance from the community at large. You know, Randgold's Tongan mine is the largest power consumer in the country, so, you know, we always hurt when there's a lack of power or there's instability in the lines, and we're right up in the north, so we don't have ring feeds that support to prevent that, and so we have to go to our backup generating facility to ensure that the mine can still run, and that of course increases the costs.
Well, one assumes that the local authorities there want to try and encourage you to continue to operate there, because I know that you're trying to extend the mine life there at Tongan, aren't you? How are you dealing with this? What progress are you making in terms of the extension of the mine life?
Well, we are making progress both with the extension of the mine life and some very significant exploration results coming out of our Bundiali exploration permit, sort of 60 kilometers west of the Tongan mine, and a new target which we've just started drilling in the Moncano permit. So, you know, I've said for a long time, Ivory Coast is a great destination for gold mining. It's underexplored, it's very prospective, it's got excellent infrastructure, and just coming back to the power, you know, this is an issue that we've been working with the government on. So it's not a case of, you know, the government not being concerned. It's very concerned. The president is involved directly, his office, as well as the prime minister, and then the various ministries that are related to power and infrastructure and mining.
I want to pick up as well on the points mentioned in the report about the interruptions at Kabali and the DRC. Certainly worthy of mention in the release, but this appears to be downtime that was authorised to change the mode of extraction. Is this over now, or is the downtime extending into this current quarter?
No, it's over. We had, again, you know, as things go in mining, we allocated some time to run a campaign to test the process on 100% hard rock feed, because that's ultimately what the mine will run on in 2 years' time. And as we deplete the near-surface ore, we are moving more and more towards hard rock, 100%. So we had to clean up some of the circuit balances, and we ran that, and that impacted on our production. But the real impact was we damaged a journal on one of the mills, and we had to take the mill down for 8 days. And so the mine limped along for 8 days. We fixed that mill. It's back online by the end of the quarter. And so, you know, the operation is now ramped back up to its throughput design, and it'll stabilize there as we go forward in the year. And we've always guided a back end, a better second half than a first half, because of the commissioning at Tongan and this campaign trial that we had planned in Kabali.
Do you see full year guidance under threat because of the production shortfalls you've been having in Q1, or are you happy that you're on target for the full year?
Yeah, we're still in line to come in within our guidance at this stage. You know, it's only 3 months into the year, so you know we've got, and we, as I pointed out, we were planning to get a better second half than the first half. So, you know, and our big you know, again, I've never tried to run Randgold Resources on a quarterly basis, and you know, and mining comes with these challenges. It's important that we manage them and get back on track as quickly as possible, which I believe we've done.
Absolutely, it's a long-term game. I understand that, and I know that you're committed to the long-term, having started Randgold. The costs, where are you with all-in costs? How are you preparing for the future on the cost side?
I think that's, you know, for us, that's the biggest single achievement, is our constant focus on costs, and the fact that we delivered a solid quarter despite some of the challenges, with strong cash flow, growing our cash by another $40 million this quarter. Profits were up slightly ahead of guidance, and you know, it goes without saying, is as we get the two operations back on track and produce more gold, those costs will come down further, and of course the bottom line will look a lot healthier.
And of course that healthy bottom line is helped as well by a sweet spot developing in the price of gold, as we've seen in these numbers. How are you preparing for the future now? We've heard about your expansion plans for the mines. You've obviously been looking at the way in which you're producing and developing and producing gold, and with this gold price rising, I mean, it's all power to your elbow in every single respect here. What's your priority now?
I think the key here is that, you know, we've always been a long-term player. We're mindful gold is a cyclical business, as are other commodities, and we manage our business on a long-term $1,000 gold price. We've really worked hard to capture some of those benefits from deflation effects in our input costs, and so we're in good shape. We have a solid 5-year business plan at $1,000. We've got a profitable 10-year business plan, and so, you know, any prices above $1,000 makes more money for our stakeholders. The key focus for Randgold Resources is, you know, replacing the gold that we mine, because we're an organically driven company. The reason we have really created value for our stakeholders is that we've found these mines and built them ourselves. So that, you know, that's our big focus. We continue to do that. Of course, we look for opportunities to shortcut that value creation opportunity in the form of M&A, but those options come very few and far between. Yeah. But that's our big focus.
Mark, we've got to leave it there, but thanks indeed for joining us. Mark Bristow, Randgold Resources Chief Executive.